Welcome to AHA Talks. I'm Cheyanne Sauter, the CEO of AHA Projects, and we support change makers like you with tools and resources you need to do work in your community. Follow us on Instagram and check out our website to keep up with all the exciting things we're up to. This collection of videos will provide bite-sized learning that you can apply immediately to your work. So I'd like to talk about the one big beautiful bill that our Senate and House passed in late 2024. There was a lot of changes that came into play for nonprofits, and one that kept standing out but has not really made sense to me is the tax deduction rules for donors, and how does that impact nonprofits and donors?
Absolutely. So from a nonprofit perspective, I think it's really important to know these changes because donors are now potentially eligible to take additional deductions on their personal returns that they were not previously eligible to take. So starting for this tax year, 2026, if you do not itemize your deductions, and I'll get into that, you can be eligible to take up to $1,000 deduction for charitable donations if you're single, or $2,000 for married filing joint on your Form 1040. So what does that mean? That was a whole lot of information. Every single person is eligible to take the standard deduction. The standard deduction means I take all my income and I get to reduce it by either $16,100 if I am single or $32,200 if I am married filing joint. So no matter what my expenses were that may be deductible, I can always deduct $16,100 single, $32,200 married filing joint. If I have more deductions than that, my mortgage interest, my property taxes, my charitable deductions, and I can add them up to more than $16,100 or more than $32,200, I am itemizing. That means I'm going to itemize. I'm going to add up my actual deductions as opposed to just the standard that everybody gets, because I think I can have more than the standard. The charitable deduction previously was only allowed to be taken by itemized filers, meaning all of my deductions added up, including my charitable deductions, were more than $32,200. The new law says, hey, even if you're a standard deduction, you don't have enough other deductions to add up, we're still going to let you take a $1,000 charitable deduction for single or a $2,000 charitable deduction for married filing jointly if you actually made those deductions. It's not just something you get. You must make the deduction. So that really becomes handy for nonprofit organizations. When that standard deduction went up really high, a lot of people stopped itemizing. So for them, perhaps the incentive to donate, if it wasn't just out of the kindness of their heart, they also wanted that tax benefit, went away. Now you can go in and say, hey, even if you don't otherwise qualify to get this deduction, up to $2,000 could be deductible if you are married filing jointly on your 1040. Now, deduction does not mean that if I owed $2,000 and I gave a charity $2,000, I now owe nothing. It just reduces your taxable income. So if your taxable income was $100,000, now your taxable income is $98,000. Then you pay taxes on the $98,000. So it doesn't just reduce your tax bill one for one, but it does reduce how much you pay taxes on. I don't recommend giving tax advice when you are out soliciting donations. So you can say you could talk to your CPA about this, but it could be a tax deduction for you where maybe you didn't have a tax deduction before.
So if I make $100,000 a year, just for simple math, I am going to take a deduction of $16,100 standard when I file taxes. So then my tax bracket is $100,000 minus $16,000, math, $84,000. So now I'm saying instead of $84,000, I'm saying $82,000 is what my tax bracket where I fall.
You know, if you're a single filer and it's $100,000, then we'd reduce it by $16,000 to get to the $84,000. Single filers are maxed out at $1,000. So we would get down to an $83,000 taxable income. So our taxable income was reduced a little bit more by our charitable deductions. Now, I did some simple math as well. If you had taxable income, so we're already past standard deduction, all of that, taxable income of $100,000, you would pay $22,000 roughly in taxes. If you had the charitable deduction at $2,000, you would pay taxes roughly of $21,560, so a $440 savings. So not huge, it's not a huge savings, but in addition to doing something charitable, you also got a bit of a tax deduction.
That's fantastic. It is super helpful. I think a lot of our donors give because they care about the mission and they understand the importance of strengthening nonprofits in our community, but to give them that little more incentive, I think is fantastic.
Right, it always helps. It's the cherry on top. Do it because you love the organization, do it because you want to. Also, it could be advantageous to you personally.
Is there a maximum with this that could be limiting for nonprofits?
So for the individual, it is maxed out at the $2,000 married filing jointly. So anything over and above that, if your standard deduction is at that $2,000 limit. It does get a little bit more complex with itemized deductions. And so with itemized deductions, it depends on your income level. So they have a much higher threshold of where it phases out at itemized. But sticking with the One Big Beautiful Bill Act changes, it's at $2,000 for married filing jointly. And that's a total. That's not a per organization. So if they give you their full $2,000, which I hope they do, they don't get to also take $2,000 at another organization and also take $2,000 at the next one. So it is total donations up to $2,000. And they do have to make the donations. Again, it is not just now we get an extra deduction whether or not we made the donation.
Yeah, a pledge is lovely, but until we actually get the funds.
And it's cash. It's also cash. So great, you gave all of your furniture away to the nonprofit well in excess of $2,000. That's an in-kind donation. That is not cash. So a non-cash donation does not count for this. It is money donated.
Well, great. That helps a lot with clarifying that. I keep hearing it's a benefit, and to understand exactly how it is so we can share that information with our donors is fantastic. Let us know what other videos you want us to produce, or if we can dive deeper into any one of these topics. If we don't have the answers, we definitely know someone that does. Thank you.